Welcome back. Rishabh Instruments is the first management on our show now. The company's reported a good set of numbers. The company's top line has come in at 14%, much ahead of the 9-month revenue growth of 4.1%. And even the commentary says the worst is behind them. Dinesh Musalekar, Group CEO of the company, is now with us on the show. Thank you very much for joining in. This is Reema here. That's the first question, right? What helped you achieve this 14% kind of a top-line growth? Because 9-month revenue growth is only 4.1%. Is it sustainable? Are we looking at double-digit revenue growth from here on for Q4 and even FY26?
Yeah, good afternoon, Reema, and happy to be here. Yeah, I think we look at our business as always into two baskets. One is electrical side of the business and aluminium die casting side of the business. Electrical side of the business, our Rishabh domestic sale was always good, even in the first 2 quarters. And in the first 2 quarters, we had relatively lower exports from Rishabh India, which is started kicking in the 3rd quarter. So that's how you see the positive trend going in the third quarter. And our other electronics business big unit, which is in Poland, Aluminium SA, this has been a big success. And last more than 3 years, we have been sustaining a growth of 20% top line with a healthy EBITDA of 20%. So these two businesses together have put in a really good show. And on the question of sustainability, yes, on the electronics business, we are absolutely confident it's sustainable and it's growing. We have a huge project pipeline to support that. And we see positive results coming out of our markets in Spain and Germany, which were a little bit behind in the first couple of quarters. And coming back to aluminium die casting business, we are moderating the sales growth there. We are cutting it down, in fact, to get rid of the businesses which were not profitable for us. We talked about that in the previous interviews and calls. We had a lot of contracts which were signed pre-COVID era when the situations were very different and they were all watertight contracts. We have been able to successfully renegotiate these contracts again with our automotive clients. There's a lot of turbulence going on in automotive industry in Europe, as you all are aware of that, because of Chinese competition, because of government policies, etc. So we have been able to navigate through those difficult time to reduce our losses there, and it's still work in progress. It will take a couple of more quarters to have it sustainable. We are driving a lot of cost reduction activities to improve our efficiencies in-house. At the same time, renegotiating the contracts with our clients. 2 major clients we have been able to renegotiate, which contributes to about 50% of our automotive, 50% of our entire die casting business. So things are on a good track, and we are pretty confident that we will continue the trend in the coming quarters.
Dinesh, you've answered most of the questions that we had, especially when it came to the Lumil Alucast business. So renegotiated contracts, what is the percentage increase from the earlier contract to the current contract? Has any portion of it already been accounted in Q3? What is the order book there? What is the accretion that you're expecting in the order book post the renegotiation? And at what level of revenue or what level of top line growth will you break even at the EBITDA level?
Okay, lot of questions there. Okay, this is, as I said, it's a work in progress. So we have these contracts, the price corrections have been done, and they have started kicking in from, I would say, last couple of months, and some of them will come in the month of Jan. So this is a period of about 9 months to 12 months, which we have agreed based on different entities that we supply, different contracts we supply. And break even, we should be getting in less than 2 quarters time. And if I look at those 2 businesses, the non-automotive is positive, and automotive is driving that. So we are not so much harping on increase in the sales growth. So if you look at, we have got a modest minus 2% on the top line. So that is kind of a calibrated. So the percentage of increases from our clients which we have got are ranging from 10% to about 30% on the selling price. It differs from contract to contract, and also we have agreed to to terminate some of those contracts during this intermediate period of 3 months to 9 months. We will be supporting them with the increased price so that they can relocate their projects to probably China or wherever they want to take them. So this is all work in progress.
Dinesh, out of time, but points well made. So the aluminium die casting business will achieve EBITDA break-even in the next 2 quarters. And this is an ongoing process which will go up to 3 quarters. Thank you very much for joining in. That's Rishabh Instruments for you.